All right, what's up, folks? Amy here, July 10th, Thursday. The crypto report, I'm still under the weather. Matter of fact, I sound like shit. So I'm going to go ahead and let our co host Josh here do most of the yapping today. Josh, thank you so much for taking the brunt of this.
Of
Um,
course, my pleasure.
but there's a lot to talk about. We have about 15, 20 minutes to get through it. And I think we can start with the most obvious thing, all time highs in Bitcoin. What do you have to say?
I mean, even if it was just a wick, all-time high is an all-time high. We saw that kind of, the next leg up loading yesterday, and I expect it to continue going into today and, over the next handful of weeks. It's a big day, and it's about time, right? We've been playing a lot of consolidation while the equities market's been hitting all-time highs and, stocks have been overperforming. So it's nice to finally see crypto catching up again.
I think the most ironic thing was that Bitcoin is led the market yesterday, and I think that's information for us. You're right. We just briefly wicked up and over 112. By the way, for folks out there, we're using Coinbase's valuation. I know that sometimes they can be slightly different depending on where you're trading, but Coinbase has the all-time high yesterday at 112. 152, and so that's what we're going off of. I think it was cool to see Bitcoin and crypto overall kind of lead the market higher yesterday. I think that when you think about risk, from a risk sentiment standpoint, crypto tends to lead the broader market. That's what we saw yesterday, and we've had internal dialogues about this frequently. Actually, is that correlation still there? I think yesterday kind of sealed that question. Is yeah, I think that when crypto runs, it's generally a good idea to be long risk in the TradFi market as well. And all-time highs generally don't get faded right away, right? We might have some consolidation here or whatever, but I think this is the beginning of the next leg up in Bitcoin. What do you think?
Yeah, I agree. I mean, there's some conversation in TTI yesterday about whether to fade the all-time high move just based on, zooming out and looking at the candle wicks. And even if, Bitcoin pulls back like last night as it did, or even today during the day, I don't expect this to not continue higher. And I think something we talked about a lot recently is how crypto, there is that correlation, but crypto's largely been leading, right? We talked about the April 7th lows and those April lows and watching crypto explode out and then equities kind of follow behind. Bitcoin's been ranging here and consolidating for the last, 2 months now, but we did move, 47% spot in the span of a couple of weeks, essentially up only, while equities kind of was still consolidating. And so it's nice to see that, potentially while equities cools off for a couple of weeks, maybe a month or so, or pairs right along with crypto, that we're seeing that next leg up in risk. And that's being echoed not just in Bitcoin, but Ethereum had a massive 7-8% day yesterday. Altcoins are starting to catch a bid once we're seeing this kind of all-time high tap and breakout. And so I think we're in the same boat here that we expect the risk on market to continue, and that at least in my opinion, uh, crypto is going to lead that next kind of risk on leg up in markets across the world.
We're seeing it in the TradFi market. Nasdaq's at all-time highs, which is obviously going to be more risky than the S&P 500 because of the concentration of tech and consumer discretionary and communications. But we're also seeing it in the types of names that are running right now in the TradFi market. I mean, realistically, meme stocks are back, and obviously, when you slide out deep onto the risk curve, meme stocks leading generally is a risk-on indicator for the broader market. You can look at ARK ETFs, ARKK. You can look at ARKX. You can look at ARKF. All of these are up into 52-week highs and/or all-time highs. That's not a market screaming risk off. It's the exact opposite. From a technical standpoint, particularly with Bitcoin, we're within a bullish momentum regime. We re-entered one when we hit overbought conditions in April. During the consolidation here over the last couple of weeks, we remained bullish. As long as we don't tap that oversold territory, we're still technically in a bullish momentum regime, and above the 50 tends to be more bullish than bearish in the intermediate and short term as well, which we're at. We're ticking up into all-time highs with the RSI confirming that. We're still trading north of an upward sloping 2-day moving average. Trends are up. Momentum is back up. Relative strength is back up. I think that trying to time a top in Bitcoin is a death wish. I think this has a lot longer to go. I know we've beaten this subject over and over and over, but if you look at the past Bitcoin cycles of all-time highs, this is a very, very modest all-time high breakout of only 58%. We're normally looking at hundreds of percent per cycle. So my price target remains minimum 150 to 155. I know you're up there into like way, way greater than that, which I could absolutely see as well.
180, 188 plus. That's not too much higher.
Well, let's round it at 200, right? I can see us hitting 200,000 because, like I said, if you think about this from these last all-time high cycles, if you go back throughout the cycle history and you look at 200% moves in the last 2020 to 2021 top, if you just extrapolate that out, we'll say even 100 to 150%, we're looking at 180, and you go up to 200%, we're looking at 200K plus. So I don't think it's out of the realm of ordinary, particularly with the amount of liquidity entering both the TradFi market and the crypto market. Essentially, all of this is just a play on liquidity. I mean, that's what crypto in particular is. It's a play on liquidity, and liquidity is entering the market. It's going to permeate through. It's going to find its way into risky assets when the market says risk on, and I believe the market says risk on. But I want to rotate back to something you said. Ethereum was up 7 or 8% yesterday. Let's talk about Ethereum really quick. It's not typically the type of chart we like to trade inside of TTI, but we see something in here. From a pure spot play in Ethereum, what do you like on an ad? What's your level? What's your price target? And then we'll get into the relative strength portion.
Yeah, of course. I mean, it's not something we would normally trade based on this chart, but when we can time the bottom live on the crypto report from a couple months ago, it's a worthwhile buy. I think for the next ad that we're looking at, we want to make sure that Ethereum gets above 3,000. I think essentially the two areas to add to your positions here, whether that's spot or options exposure or leverage, whatever folks at TTI are using, or more broadly, is we're looking above 3,000 and then above 4,000. It's kind of a big gap, but we want to make sure that we don't get range bound as ETH has been for a lot of 2024. And so we finally have this breakout above kind of 2,700. We're above the 200-day moving average. We're above kind of those short and midterm trends. And those are all starting to kind of curve up and to the right now, with the exception of 200, which looks like it is going to be flattening out. And so let's get above that $3,000 area, an area that has typically been support resistance for a lot of Ethereum's history, including, back to 2024, looking at March through to the end of the year where it finally broke down and then broke back up. So above 3,000, another risk on area to add to your positions. And then above 4,000, we would be adding there to take this to essentially all-time highs, right? We're going to try to aim to take it to 4,800 and then beyond. And then, let it ride from there. I don't think, ETH is something you want to be continually adding to, after above all-time high. But from where we are now, most of TTI has a pretty strong position that we've been building within this consolidation channel based on relative strength and momentum, as well as at that $2,000 level. So keeping it really simple. Above 3,000, add a little more. Above 4,000, add a little more. And then let this go to Valhalla.
I'll be the first to say that I'm usually the asshole that says don't add into losing trades because it's just a very, very easy way to lose money. But I'm the asshole that's been adding Ethereum consistently every single week since we originally opened the position. From a technical standpoint, on an absolute basis, Ethereum doesn't necessarily strike me as the best trade, at least against the dollar. We're back above the 200-day moving average, which last Thursday I said, if we get back up and over there, I'm adding more. I did that this week. I added a lot more Ethereum, actually. We're still holding this bullish momentum regime that we started way back in May. So interestingly, Bitcoin started that bullish momentum regime in April. And it took Ethereum a little bit longer to get going, but we're back up in a bullish momentum regime, trading north of a 200-day. 200-day is potentially starting to even out. As you said, it's not sloped up, so you have to take this with a grain of salt. I think you're right. I think we have to play this from a level standpoint, add a little more at 3K, add a little more at 4K, all-time high is the price target there, and then potentially beyond. I don't see a market where Bitcoin continues to rally into all-time highs and Ethereum does nothing, particularly because of the ETFs that are coming out and some of the other fundamental stuff that I don't want to get into. But I like Ethereum on a relative basis, which is, I talk about this a lot. I've posted it in the newsletter a lot. Whether you believe it or not, folks, I think that, and I'm not only am I risking my reputation here because I keep yapping about it, but I also have a lot of money on the line for this particular trade. And I'm going to let Josh take this over, but the one thing I'm going to say is I've been trading now for 15 years, and I can look back a handful of times and think to myself, I saw a trend early and I just didn't capitalize enough on it. I either didn't put enough money into it or I took profit too early, just stuff like that. And I've really worked on that over the last couple of years in particular. nailed some of the AI bubble trades and stuff. But here's the next big thing. And if you look at this chart from late 2019 into late 2021, there was a 2-year run where Ethereum outperformed Bitcoin by 400%. And this was in a market where Bitcoin was hitting all-time highs. It just was that Ethereum was outperforming it. So from a pure trading standpoint, Ethereum was the better hold than Bitcoin. Bitcoin gets all of the headlines because it's Bitcoin and it's juicy at $112,000 FOMO. No one's going to buy Ethereum because it says it's trading at $2,800. They would prefer to own Bitcoin because it's, you know, the more popular name, and big numbers tend to attract more folks. But from a trading perspective, the last time we rounded a bottom off of this exact same level, which we saw late 2019, we went on for a 2-year run of 400% outperformance in Ethereum. So I'm of the opinion, and I'm sure you're on my side, that Bitcoin continues to run, I think crypto continues to run, and I think Ethereum will once again, just like it was in late 2019, has an opportunity to outperform Bitcoin. I don't know if it'll be by 400% again, but the better hold in my mind is Ethereum here, and I am very much allocated towards this particular trade. Is there anything you want to add to that or anything that I missed? I know that I've been talking about this nonstop, but every day I look at this chart and I just get more bullish, which is why I continue to buy Ethereum.
Yeah, of course. I mean, okay, one point is something we talked about a lot, and you even touched on it about 5 or so minutes ago, is that Bitcoin typically runs multiple hundreds of percent from its previous all-time high in the previous cycle, right? Right now, Bitcoin's ran 40, 50% from its previous high. And so I think everyone we know is in agreement that we expect Bitcoin to continue to run higher, whether that's 150 and it puts in a 105% move from its previous all-time high, or if it's 200, or if you have folks out there calling for 300 to 500K this cycle, which we're not going to get into.
I would love it, but probably not.
Yeah, of course. When we come to ETH, we're talking about how Bitcoin is kind of the big thing that everyone's buying, but we've had countless ETH treasury companies spun up in the last 2 weeks, right? Allocating hundreds of millions of dollars to ETH. You have companies that are selling their Bitcoin, $200, $300 million worth, and full stacking it into Ethereum. There's a bunch of, we're not going to talk fundamentals on here, but a bunch of fundamentals when it comes to Ethereum that are really interesting. So I'm fully with you and agree that I expect to see ETH outperformance, especially over the drawdown in ETH BTC we've had since, call it the local highs of October 2022, the nonstop dredge down. And so I expect the same outperformance, right? And we're positioned for that, whether that's in ETH, liquid contracts, whether that's spot leverage, whatever it may be. This is the play that, potentially could make or break a lot of portfolios, especially after the drawdown we've had and, some of the chop crypto's been through over the last couple of years.
The biggest trades that I remember through my career are not necessarily the ones that I nailed. They're the ones that I fucked up on or missed out on, and this is one of those situations. Yeah. So I want to point something out for those of you that are watching this. We're not day trading this. We're not even technically swing trading it. I mean, this is a position style trade. I'm looking to hold for quarters. If you look at when it started to run in late 2019 and it lasted until the end of 2021, there were periods where Ethereum underperformed a Bitcoin for a couple of months straight, but the trend was still higher. And so I'm really trying to capture the 80% of that trend higher. And I will tell you, very rarely do I personally catch a bottom on anything. It's not something that I look to buy. It's not something that I hunt for. But occasionally I do end up buying the bottom, or even better, selling the top. It's just not something that I thrive around. In Ethereum's case, I bought the bottom. And so call it confirmation bias all you want, but I've learned over 15 years, you don't get rich by over diversification. You get rich by concentrated bets and then watching that fucking concentrated bet like a hawk. It's the Druckenmiller style, right? Put all your eggs in one basket and then watch the goddamn basket. That's what I'm doing with Ethereum. So I have BTC spot exposure. I have BTC leveraged exposure. I have IBIT exposure. But if you have $100 and you're looking to divvy this up into the crypto market, Bitcoin is always going to be that pillar trade. We talk about that in TTI all the time. We have long-term bank stocks on our portfolios. We have European financial stocks. I mean, these things have been moving great. We're making money on them, but these aren't the 1,000%ers in a week or two, like some of these high beta software stocks. I think Bitcoin's going to be the same. It'll be a pillar trade. It's going to be a good trade. We're going to make money on it, but is it going to make you the thousands of percent that everybody expects it to? Probably not unless you're trading with leverage. It's just probably not going to. The overperformance is Ethereum, and then as we'll get into when the alt season actually starts, I'll let you talk about that right now, and that'll be kind of the ending segment here. The altcoins are where you're going to make all of your fucking money. I mean, Bitcoin, like I said, it's a pillar trade at this point. You're not going to hit 1,000% trade in Bitcoin anymore. It's probably not going to happen. Bitcoin probably won't rise 1,000% over the next year or two. It's just not going to happen. From a market cap standpoint, it doesn't make sense. But some of these smaller market caps, Ethereum included, could. So let's talk about that really quick. Let's talk about what do we need to see in the market to start getting geared up for an altcoin season. And then how would you personally allocate a portfolio towards that altcoin season? Because I'm going to tell you folks right now, when altcoin season is upon us, you could throw a dart at a dartboard and hit a bullseye pretty much every single time. But it's about recognizing what type of environment you're in. So Josh, where do you see us in regard to that cycle? Are we closer to an altcoin season than not? What would be the confirmation for that, and then how would you play it?
So, great questions. Where are we right now? We're not in one, but things are starting to get kind of warmed up. A lot of charts looked bottomed out.
Do you have a specific chart that you like to look at when you're thinking about this? Is it others? Is it some sort of total crypto market cap without Bitcoin and Ethereum, or is it just vibes?
I mean, it's arguably a mixture of everything, right? I mean, to start off, we can look at total 3, right? Look at everything excluding Bitcoin and Ethereum to kind of understand how the rest of the market is moving. Typically we wouldn't look at total 3 because over the last 2 years, Solana's made up such a large portion of the market cap and the daily mover, it's kind of skewed it. But now that Solana's playing ball, kind of like the rest of the majors, we can go back to this chart. So we just clipped above the 200-day moving average. We are trending upwards. I think the first key sign is we're going to clear the $1 trillion level, but we want to see an all-time high breakout on total 3. At this point, if we get to the all-time high level, altcoins are going to be up multiples by now. So, there is an opportunity, and we posted some trades in TTI last night, and did a bit of a write-up before falling asleep last night about some assets that look really good when it comes to altcoins. But one, we want to see total 3 hit a new all-time high. 2, we want to see continued ETH outperformance. People talk a lot of shit about ETH even when it was down, but one thing that's been true is in order for us to see a true altcoin cycle, we want to see ETH BTC also outperforming. It's, something people don't really want to talk about because a lot of people don't like Ethereum for a number of reasons. Underperformance being the main one. They don't like
money. That's fine, yeah.
Of course.
When Ethereum is running, you own Ethereum. It's just that simple.
Yeah, exactly. And so, one, we want to see Bitcoin continue to be moving towards all-time highs, whether that's grinding, because as we all know, if we get a big flush in Bitcoin, all of your assets are down 20% in a few minutes, and that's just how it goes in the crypto market. But with assets with an ADR of 10 to 30%, that shouldn't. It sucks to look at. That shouldn't scare you, especially if you're swing trading. If you're day trading, it's a little bit different. So first, total 3, new all-time high, and continuing to trend upwards. We're above that 200-day. That looks good. We want to see ETH BTC continue higher, as well as Ethereum overperformance. So as we start hitting these kind of key levels that we just talked about on ETH, 3,000, 4,000, all-time high, that is going to see euphoria start sparking up in meme coins. And then from there, when you're looking at meme coins, you can use sites like Velo.xyz, which I commonly refer to in the newsletters I write every week, and look at which sectors of meme coins which sectors of altcoins are outperforming. And by that slip up, you can kind of assume that meme coins over the last 4 years have overperformed all altcoins at the start of the next leg up, typically lasting 1 to 2 weeks, where you see massive outperformance. So if the average altcoin move in a day is 10%, meme coins are moving 20 to 30%. And so kind of rotating through, depending on where we are in the cycle, from meme coins and then trickling those profits down into, AI, DeFi, L1s, things of that nature. So essentially, we want to look at total 3. We want to look at ETH BTC, and total 3 or others. Others looks a lot shittier just because it doesn't include the top 10. And then once we start seeing these, new yearly highs, new local highs, new all-time highs, it's time to really press the gas down.
Yep, I agree.
That being said, there are a shit ton of trades out right now that look really good. Last Thursday, you and I chatted about a meme coin. It's a joke name. It's called SPX 6900, right? It's a internet community meme coin. Jokes about the S&P going to 6900. We talked about how it was in a cup and handle last last week, it's now breaking to all-time high. So like that was a trade that went out yesterday, saying like we talked about this last week. You had the opportunity to enter on the handle break. It's now going to all-time high, right? $1.6 billion market cap.
Yep.
And so a lot of charts are looking really good. You know, you have names like Fartcoin, you have names like SPX, you have AI names like Virtuals, you have other meme names, other meme coins like Mog. You have actual assets with utility. You know, there's Hype is a coin that runs Hyperliquid. It actually has profit. It has revenue sharing. It has token buybacks to the amounts of I think nearly $1 billion at this point. You know, that's breaking to all-time high. You have older names on the market. You have Bitcoin Cash. You have Monero. All of these in constant uptrends and breaking all-time high. And so what I'm telling folks is you need to start putting a little bit of risk into the market now, especially as ETH begins to overperform again from kind of the recent month or two. Slowly push that in, and as Total 3 and others climbs, we can press it down even further. But I think the positions and moves you make now, whether that's in Pengu, which we posted about last week, it's up 26% today, right? Now, beautifully in profit. The positions you make now in the altcoin space, as well as Ethereum, of course, with the breakout, are going to really create a massive padding to your portfolio once you start pushing full risk. And we're seeing kind of that euphoria take over with, Total 3, others, even Total breaking to all-time highs. And so, I think something I've advocated for is pressing some risk now and then having stablecoins ready to press risk if this move continues and it's not just, a fade or we have some new headline risk that's been messing with us all year so far.
Yeah, I'm on board. I think now is the time to strike before everybody else gets in. I mentioned this in the TradFi market. We've talked about this for the last 3 months inside of TTI. Once the market bottomed on April 7th, we didn't buy the absolute bottom, but we bought about a week afterwards. We started to allocate. We said, listen, this looks like it could be something. If it does confirm to be something, let's start adding more. We added more during or right after the Zweig Brett thrust, which all the macro guys made fun of, and now they're looking like fucking idiots like usual. And then we started to press the gas pedal down above the 200-day moving average, and that was the best thing that we could have fucking done. I mean, we almost played it perfect, but we didn't buy the bottom. Almost. I think the hard trade is when we get back up and it's obvious that you need to be buying, because by the time it becomes obvious, the market gets a lot more volatile, a lot more whipsaw. We're seeing it right now. TradFi markets, SPY, QQQ up at all-time highs, and sectors are churning. Meme trades aren't playing out the way they were the last 6 weeks, and people are complaining. But people were fucking complaining 6 weeks ago that why is the market up? I mean, you can't help these people. Crypto market's going to be the same. When it's uncomfortable, but the signs are there, throw some risk on. Once it becomes very obvious that risk is coming back into the market, it tends to be a tougher trade. It's not that it won't work. It's just tougher. So if you want to make it a little bit easier for yourself, throw some money in the market, give it some time, breathe. Don't stare at it all day, every day, particularly in the crypto market, because this shit moves like a video game. And if the markets are correlated like we think they are, well, TradFi is at all-time highs. Crypto probably not that far off. I gotta go. I have a doctor's appointment I gotta go to because I'm sick with an upper respiratory infection. I appreciate it, Josh. For those of you inside of TTI, if you have any questions regarding anything that we went through, feel free to leave them as a comment on the market research side, and Josh and or I will reply as soon as we can. And if you're listening to this on YouTube and you're not a member, first off, what are you doing? Fantastic way to get exposure both in the TradFi market and the crypto market. But if you're not inclined to join and you have a question, Josh will help out if you leave a reply below the video. All right. Josh, thank you for your time. Appreciate it. We'll yap again on Thursday next week.
That sounds great.
See you.
Feel better.